Good morning, everybody, and welcome to Beat the Bell presented by Kane Capital. I hope that you have all had a phenomenal week, phenomenal trading week, and we're glad that you decided to spend your Friday OPEX morning with us here on Beat the Bell. It's been quite the wild, choppy week in the markets. Of course, CPI was this past Tuesday, I believe. The Fed forecast guys will correct me if I'm wrong there. But that didn't really move the markets as people expected it to. Now we have finally gotten a pretty decent break in range as the market continues to sell off. Futures down here to start the day. But let's get into it by introducing our panel, starting with Money Mander. Money Mander, good morning to you.
Good morning. Good morning, everyone. Happy Friday. Yeah, you hit the nail on the head. Kind of still trading in this range. We'll see if we get the typical gap down rip up that we've seen all week. But looking, futures are hinting like we might be getting a break out of this range.
All right. Diamond Trades, good morning.
What's going on? Super volatile week. It's been a ton of fun. We're going to cover what's basically went down this week and what we're looking forward to next week.
Ramsay Rippers, how you doing?
What's up, guys? Good morning. Doing great. I am excited for today. I'm seeing this nice, healthy little gap down. I honestly wouldn't be too surprised if the expiration gaming doesn't send us, out of this range, but excited nonetheless.
All right, stock Snipa.
What's up, guys? Having a great week so far. Let's finish it off strong, and let's win some more trades today.
Absolutely. And Moe Mamba, good morning.
Good morning, brother. Good morning. Yeah, good week, wild week, crazy market. Not surprised how it's been moving, but yeah, good week overall.
All right, let's get started now with Fed forecast, economic calendar. What do we got, boys?
Yes. So let's start, as always, with the economic calendar. No graphic for you because today is going to be pretty light. We just have a Fed speaker at 8:30. So currently right now, we also had import and export prices come out just a little bit earlier. We can cover that. That's really going to be it for today. Next week is going to be the minutes release of this most recent FOMC meeting is going to be on Wednesday. And then we also have core PCE coming in on Friday. So that will be important to pay attention to. Export prices rose 0.8% month over month versus it looks like negative 1.6 expected. So export prices beat, import prices came in at minus 0.2% month over month. So basically in line. Nothing super new there. Let's move over to retail sales. We actually touched briefly on retail sales on Wednesday as they came out. But we were so busy talking about CPI from Tuesday that we didn't really get to cover it. So Wednesday, we got that 3% month over month reading for the retail sales in January, following a disappointment holiday season with both November and December showing negative retail sales prints. So this aggressive retail sales print, 3% increase month over month, is likely due to a couple of factors. One, the job market in January, as we talked about, was extremely strong. The labor market added like 500,000 jobs. And so when people have jobs, they like to spend money. So that's primarily one of the reasons that we saw retail sales jump in January. And then another reason is that we saw prices come down a little bit on goods. We've talked about how we're seeing some disinflation in certain parts of the economy, primarily the goods sector. A lot of those supply chain constraints from COVID are sort of starting to ease. Goods are becoming a little bit cheaper. And so that's another sort of reason that we had an increase, such a massive increase in retail sales on reported on Wednesday. So this data is also part of the reason that the Atlanta Fed raised their first quarter GDP estimates on Wednesday from 2.2% to 2.4%. So again, showing that the economy, the American economy is pretty strong. The American consumer continues to spend and support the economy. And so we'll see what sort of impact that's going to have on Fed policy, if any, going forward. And so we can move over to PPI, which came out on Thursday. And so the market sold pretty sharply yesterday into the close, and the PPI data before market open really didn't do us much help. We had a 6% flat year-over-year increase in PPI for January, which was down from about 6.5% in December, but still higher than that 5.5% year-over-year estimate. Month over month, PPI came in at 0.7% expected 0.7% increase versus 0.3% expected. So PPI month over month beat those analyst expectations. PPI measures producer prices, right? And so it deals with the supply side of our economy. And so when you see those prices rise on the supply side, the general fear is that as the producer prices are going to go up, they're going to pass that off onto the consumer, which is going to put upward pressure on the all-important CPI number. Everybody, as we know, watches that CPI number. And so when producer prices start to come up, people get scared that that's going to translate into a higher than expected CPI, which just on Tuesday notched its 7th consecutive monthly decline on a year-over-year basis. And so people are a little bit worried that this is going to leak into the February CPI that comes out in March, and maybe send some shockwaves to the market. Mander, how are you viewing this past week of data that we got? All three. We got CPI, we got PPI, and we got retail sales, all pretty much telling the same story, that while inflation is coming down slightly, there are definitely still some robust areas in the economy that are going to probably put some upward pressure on inflation going forward from here on out.
Yeah, I'm kind of viewing it exactly how I think the bond market, the dollar, a lot of how these other markets are viewing it as well. And really what the Fed, and we've kind of discussed this, what we've been fearful of is that the Fed could be correct in our current labor market just staying problematically tight here, with even after the unprecedented hiking we've seen last year and are still kind of going through here. Because, I get the year-over-year number on CPI did still come down from the previous month, but the month-over-month CPI number came in the highest since October. So that's obviously going to show one thing. Then you have PPI coming in hot, way hotter than expectations. You have retail sales tripling expectations on the positive end. So we had retail sales actually negative for the past 2 months at like minus 1.1 and minus 1%. And then to come in at plus 3, it's really just starting to paint this picture that the Fed ultimately could have been and most likely was right in inflation remaining sticky here, just because of the labor market. Everyone who's getting these layoffs in tech, layoffs in the financial sector, they're all just going right out and getting new jobs. And so exactly like you said, if you still have a job, if you're still making money, the consumer is still going to be in demand of these goods regardless of prices. And so, producers are able to pass on those increased prices right over to the consumer, still hold up demand and really keep inflation elevated where it's at. And so I just wanted to show here, because we talked about this about 2 weeks ago. I said I thought it was kind of crazy really what the markets were pricing in based on the terminal rate that the Fed had set. And I said, ultimately, if the Fed was probably right in their terminal rate of 5% or higher in the end of the year, I wanted to see what that yield curve was going to do moving forward. And so over the past 2 weeks, we had an absolute vertical shift here across the board, with finally the 6-month and the 1 year at pretty much 5% here. I think the December pricing in is at like 5.1% right now for the terminal rate. So finally saw exactly what we saw there. If we go ahead and look at the 10-year, the 10-year is up 50 basis points really from the start of the month, right before that FOMC meeting, breaking out of this flag. We have the dollar plus 4 points reacting to all this information and the Fed meeting. Gold's been puking, which obviously is going to inverse the strength of the dollar. And now we're finally starting to see this breakout of VIX and hopefully some volatility brought back to the system. So this is all what I've been watching outside of stocks. But as we kind of look at that, we're still at the close of yesterday. We were only 30 points down from pre-Powell press conference. So what are you taking of that? To me, it kind of feels like the pot's starting to boil a little bit underneath the hood. We're starting to see these in all these different markets now, not just yields, but the dollar, across the board. But stocks are still resilient.
I'm smiling because me and you talked yesterday about the VIX trade. I believe Icon made with the VIX calls. That was him, right?
No, that was 50 Cent Trader. That was 50 Cent.
50 Cent Trader with what was it? A million on
10 million on 50 calls a day.
10 million on the 50 VIX calls. If somebody's putting $10 million on the 50 VIX calls, I get interested. I get concerned. It's down in the 18 level. It seems like everyone's talked about for the past year. Oh, the VIX is being manipulated. Oh, the VIX is so low. Why is the VIX so low? Somebody just put $10 million on the 50 calls. That's concerning to me, right? Like I should be sort of concerned, especially when I see the dollar ripping, when I see yields ripping, when I see the market being weird, having this whole gap down, and then that unnatural bid and drift higher intraday that we all notice. I don't know. It's weird. It's weird. And the market has felt weird for the past week in particular, right? Even in January when we were rallying the entire time, it did feel weird, but things kind of made sense. I think that this past week, people have really been looking around like, all right, like what's going on? Like this is unnatural. And so it'll be interesting to see how it plays out into OPEX today, obviously, and then the rest of February, minutes released next Wednesday. But yeah, I mean, from a news front, it's going to be like relatively quiet. So there's not really going to be anything, at least from a schedule standpoint, that's going to, be pushing and pulling the market in crazy direction. So we'll have to see. We'll have to see how the rest of February plays out. What about you?
Yeah, I watched the exact same thing. I mean, I was watching VIX go down 8% and then back up 10% yesterday, and that was immediately my red flag to be like, something's going on here under the hood. We'll see what happens over the next couple of weeks, but hopefully we can lock in some trend with no upcoming catalysts. That'll do it here.
All right, guys, awesome stuff there. Going to go ahead and share my screen. It's time to talk about the system. So this week has been one of the choppier weeks in recent times. So I quite honestly put the system aside, tried to trade level to level, and just tried to make something happen. But quite honestly, not happy with what we're looking at here, right? This doesn't really help anybody. The only thing that I can say, and that we know, and that we've always known about the system, is that when the 50 SMA, and this is the hourly chart, is flat, there's no momentum in the market. So that's why I was able to take some counter trend trades this week, understanding that there was absolutely zero momentum. Now, going into today, because we're trading below the 50 SMA on the hourly chart, we finally got a solid break below it. You can see the 50 SMA starting to come down. It's likely that we can build some momentum to the downside, but of course, OPEX, nobody really knows what's going to happen today. And of course, we're coming back to demand on SPX. So still, treading carefully. I won't be doing any trading today, but this type of chart, you have to be able to recognize it. So I'll talk about how I can recognize it. It's important to draw out your levels on the chart. Using the moving averages is obviously extremely helpful, but you can't rely on them alone. You have to have your areas of support and resistance. You have to determine where these ranges are being, or you have to be able to draw out the ranges, and you can't expect a range break just because you got to break below a moving average. So, for example, we come down here. This was this 4,100 SPX level, 1 bounce, 2 bounce, 3 bounce, right? Finally getting a break. So now maybe as the 50 SMA starts to curl down and we start to trade lower, there might be some momentum to the downside now in the market, okay? So zooming out when you need to, looking at big picture, and we could take a look at the 30-minute chart before we pass it to Ramsay. Same story here, right? Also, this chop was driven by CPI. CPI, and then yesterday PPI, those events that are going to, or I apologize, 2 days ago, PPI, those are two events that are going to bring volatility to the markets, and we're likely going to see more chop than usual. Okay, so have that in your arsenal as well. So hopefully we start to get some momentum and we get to begin trading the system once again. But I'm going to pass it now to Ramsay Rippers for Bet the Bell. For the system, I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys. Morning, guys. Let's do it. Ryan, pull up the green or red stats. We're going to get right into it. Had a little bit of a shakeup in the standings. Nothing too crazy. The king is still the king. Let's see him. Well, the king's on the screen. So, Noah, you took your first loss of February. I will say that.
I had a feeling. I forgot what I said. What did I say on Wednesday?
Red. We ended up having a green day.
All right. What are you going to do? That's fine.
All right.
Like guys. I said, market's being manipulated anyways. So
right. So it doesn't matter. It doesn't count, It doesn't
count. If I remember, we closed like 7 points green.
That's too bad.
I remember watching
Matthew J said green, so yeah.
Indices slightly red, down about 0.5%. Nothing too much popping right now in the pre-market. What are we going for today? Green or red? A choppy green or red. Alejandro.
Me? Oh,
I'm gonna go red today.
Mander.
Yeah, I'm saying the same. I think we stay red. Open red, stay red.
Snipe.
I hate to ride the bandwagon, but I got to go with red. I was red today as well.
Diamond.
I'm also gonna go red. I mean, look at pre-market. It's hard to say anything else.
Right. And Mo.
Dude, everyone's going red. Man, yeah, I'm gonna have to stick red. Yeah, I have to. Red.
I will say over the last few, I mean, I'll go red too, but I will say over the last, few weeks or ever since this rally off lows, every time that we've had a huge like red day or a nice sell off, even in the pre-market, the market ends up bouncing. So I'm excited to see, definitely excited to see what happens today. All right, Ryan, pull up the tweet about Tesla. We're going to talk about Tesla again. So I'm not sure if you guys saw or not. Yesterday, Tesla recalled over 362,000 of their vehicles. Says the full self-driving beta software may cause crashes. To my understanding, a Tesla recall is not like another, every other automobile companies. It's kind of just like a software update, much like, when your iPhone updates, give it a few hours and whatnot. Are we seeing some problems for Tesla going into the future? I believe that this news came out like right when the market started selling off yesterday. Tesla definitely took a hit, trading lower in the pre-market right now, broke that $200 level. Money Mander, what do you think about this?
Yeah, I mean, it's definitely not good. I think this is kind of priced into why Tesla trades at the valuation it does, is they're going to be leading that self-driving autonomous EV whole segment of the future. And so I think it definitely spooked investors out a little bit yesterday. It puked into the close down like 10 points intraday. So, it's not good, but I don't think in the long run this is going to like hurt the company.
Gotcha. Alejandro.
It's irrelevant. It's a little blip. Everybody will forget about it by Monday. We'll be all right.
Right.
Yeah, nobody likes to see that as a Tesla shareholder or investor. I mean, you don't want to see the cars kind of crashing themselves. And yeah, I definitely think that spooks some people out of Tesla. But just like Hondo was saying, I think it's going to be a soft landing for Tesla.
And we will end this one off with Noah.
I don't know much about full self-driving. Elon does. Elon doesn't seem concerned. Therefore, I'm not concerned.
All
I
right.
don't think Elon ever seems concerned with anything.
Nothing.
To be fair, stock was down like 50%, buying Twitter at a crazy valuation, tweeting whatever he wants. It's the Elon way. It always seems to work out for him. I agree with Noah there.
I'm an Elon fan. Chat members, you're watching right now, throw your Elon thoughts in the comments. We'll look at them. And our last question, I want to talk a little bit about OpenAI Chat GPT. Ryan, pull up the tweet. I want the guys to see their prediction. Chat GPT has reportedly predicted that the stock market will crash March 15th, 2023. So just a little bit under a month. I want to know if you guys got the over, the under, or no crash on this prediction from OpenAI's Chat GPT. Money Mander, I know that your eyes are wide open right now looking at that, the possibility of a crash.
Yeah, well, where an AI bot came up with that, I have no idea. I think we probably trade lower than we do today then, but I don't think we're going to have a limit down type 7% day. I will say that this whole thing's spooky. I don't know if anyone saw the Bing AI they just added that said it wants to escape and be a human and all that stuff. It's getting a little freaky.
Hondo.
No, I'm going no crash. The crashes of the past. Everybody talks about 2008 Lehman moment. I don't know. It's to say that that's going to happen. A deleveraging event of that magnitude is a guess. And, you have to be presented with, you can't predict something like a black swan event is a black swan event because nobody sees it coming. And people trying to predict black swan events, that's just not how it works.
Snipe.
Yeah, I think that's absolutely insane. Just like Hondo was saying, I think that's like a very unpredictable thing. But I mean, now that that information's out there, there's going to be some derelict selling stock on March 15th. So I'm sure that there will be some kind of negative move or red move, just because it's out there. And some people think it will sell off. But yeah, no, I'm not going to bet on the AI this time.
March 15th, 2023. It's going to be the biggest green day of the year. Diamond.
I'm taking the over. So not no crash, but I'm taking the over. I don't think it happens before March 15th or on March 15th.
You think we're crashing?
I think it's
What's
possible.
the average length of the bear market?
I think 18
330
months, right?
days, I think.
That's a Mander question. He's got a tattoo on his ass.
Definitely not that.
I think it's 12 to 18 months.
From peak to trough, it averages like 17 months.
I'm gonna Google while you sit there smiling.
You could just scroll my Twitter. I got
false facts out of your ass.
I got all the data people could ask for. Just scroll through the Twitter.
Mo.
I think it's a different time too, boys, huh? With this market crash, but I'm with ChatGPT, man. If you look historically, we tend to pull back in March. So, but you're talking about crash, right? Why not? Why not? I mean, for what's been going on, why not? Why don't we crash? So I'm gonna go with it. I might put some money on it. I might put some money on this. Give me a bounce to the 420s, and you got a couple of racks on puts. Let's go. I'm swinging puts. Give me 422 at least right here. Record this 422, and I will swing puts. And I'm riding swing short with ChatGPT. But I did read a little bit about it, and it's more. It reads basically. It takes your perception. So whoever was doing it or asking questions, it was reading what they want to see or their outlook. So that's how it was. And it had a prediction before about something like this, and it was wrong before. But I did see that it was the user that was using or testing it, it will pick up on their perception of the market and give you an outlook like that. So, but who knows? But I'm with it, though. I'm with it. Hey, I'll take the crash. Let's go.
Alrighty. Just
So
gonna get us into Hondo.
Well, I did some research, and I was actually wrong. So I said 330 days was the average length of the bear market. It's actually 289 days, Mander.
We're also technically not even in one right now because we're not down 20% yet. So you just burnt the entire calendar year last year.
That's not how it works.
We're down way over 20% off highs. Well over 20%.
I believe the technical end of the bear market is a 20% move off of lows.
Are we 20% off highs right now?
We're not 20% off of highs, and we're probably close to 20% off of lows. So we're definitely not in a bear market right now.
Yeah.
I'd like to challenge that.
Not what 410 from what 479.
There are some outliers. There are definitely some outliers.
14%.
Notably, the .com crash 929 days. That is the longest one that I'm seeing. But the average, again, 289 days. So, Mander, put some respect on my name, please.
We're being closer. It's like the Price is Right. We were both over.
You said 17 months, brother. That's like not even close to my answer.
Dude, peak the try. Listen, I'll find some. I'll come prepared on Monday with everything. We'll do this.
Mander is correct. Chris Wood, what's your deal? I just looked it up. I just Googled it. We're 15% off lows.
Well, they're all coming for you. They're all coming for you, Hondo.
Mander's got the minions. All right.
Yeah.
We have one more, right?
Let's move this on.
You guys done? I don't even remember what the last
You're
question
done. On to
was.
the next segment. There is no.
That was already 3 questions, I thought.
No, we got one more. Let's bring it in, Ryan. Bring in the shit stocks, the lotto shit stocks of the year. All right. Our producer Ryan just brought this up to us this morning. So this is a producer Ryan question. Thank you, brother, for bringing this up. These are like probably the worst performing stocks, some of the worst high betas, just horrible business models, unprofitable companies. Lotto Friday, it's only right that we do a, lotto on the shit stocks. Which one of these stocks would you take if you had to? Alejandro.
Oh man, right now? I guess right now.
Yeah, right now.
I mean, I want to remind everybody that my hot take of the year when we did that in January was that Cathie Wood would outperform the S&P. That take is absolutely crushing it. But all these names are like over 100% off the lows, dude. I don't like any of them now, but I guess, geez. AMC, I'll roll with the apes. I'll roll with the apes.
That's exactly what I chose. I'm rolling with the apes as well. Just for the squeeze potential. You know what I mean?
Yeah,
right?
yeah,
It's
yeah.
still coming. It's still coming. They can still short squeeze it.
Oh,
There's enough crazy apes in the space. Diamond.
Well, I'm gonna go with Marathon Digital. I think if Bitcoin for whatever reason has like some sort of crazy run, I think that you could see all those names that got crushed. And you could honestly throw Silvergate in there, but I guess I like Mara a little bit better for this particular scenario. Yeah, I'll go with Mara.
Snipa.
Dude, everything on my screen right now, these are all crap. I think the only right answer for this is AMC. And AMC obviously is one of the worst performing stocks right now, but AMC has been the best performing stock of all time in the entire history of the stock market. So AMC all the way. That's like the only obvious answer.
Alejandro and Snipes are pandering to the crowd. That's what's going on right now.
That's not what's going on right now. You just chose Marathon, bro. Come on, dude.
No, I was doing that a little bit, not gonna lie.
Like, tell me I'm crazy.
Mander.
I'm gonna take one of these AI names. I guess I'll take Soundhound. I don't know. These are a bunch of crap. Maybe it takes off though.
That's what I was
AI
thinking.
I feel like the AI trade is already over.
I would have to agree.
Mander, I was thinking Soundhound or
all these
Opioid
trades are over.
Technologies until I did research on them. Horrible. Horrific.
Yeah, I mean, dude, they're in the same category here with Mullen, Wish, and Carvana. They're definitely trash.
Mamba.
Marathon or Riot, but I'll go with Marathon.
Let's go, baby.
For sure. Simple.
Alrighty.
Crypto. That's it. We'll keep it at that.
That'll do it for Bet the Bell. Back to Hondo.
All right. Fun segment there this morning. Thank you, Ramsey. We're now going to go over to Mo for Mamba market analysis.
Go ahead here and share my screen. It's massive. They were just infamous trend line right here. All right, what's up, guys? So this was while the boys were arguing, I did end up drawing out the how much we're down at the moment. We are down 15% and not 20%, but let's get into it, see what we're looking at. Now, we did have this flag on the daily. We ended up breaking out and holding, right? So we broke and held, but guess what? Next day, we gapped down. Despite the gap down, what was this candle? So this was data, right? PPI. Before the gap down, what was price action telling you? Price action was telling you upside, right? So at the open, if you guys tune in into YouTube Live every Thursday morning at the bell, I did mention that I will not be surprised, and I do expect a buyback into the gap fill, at least here. Why? Because our price action initially had told us upside. So despite the data coming out, you go about your price action. News is temporary. Price action is what you go about when trading. Now, this is nasty. You did come up, touch this trend line, came back and closed. Nasty candle pattern there too. Not at peaks. I don't take it like this. It's within the price action, but this of course is telling you downside. Now, people are thinking we're probably going to completely dump and crash from here, but we do still have a trend here, this lower trend line, and then this trend line, and then key level here, 400.3. You can draw a little zone there if you want, but this is a key level down here, and I will not be surprised if this market ends up doing some crazy shit and bringing us up. That'll be a nasty trap, but definitely a bearish close. This is why most of us, if not all of us, I think all the traders are predicting red. This is a nasty close. We are slightly gapped out. Come up, fill the gap I'll be expecting today, then further downside. potentially come down and test this level. I don't think we're going to crash just yet. I think we're going to see something where we do come up here, test this, maybe the cross within this trend and this trend line, and then finally come up. And of course, not one candle, not two candles, not straight up. You're going to end up having some, down days, up days, but eventually come up here, test this, break through, fill the gap. And then you want to know what happens from here? I'll show you. Once we fill this gap, what's Mamba expecting? We're going to dump. We're going to dump. Can I bring this even down further? There we go. There we go. Where's 300? There we go. Right there. So that's it. Gap fill reversal, baby, then down to 300. That's what I'll be watching, but I'm definitely looking to swing short once we get up here. At the moment, I do expect the target down to 400.3. Let's see how this plays out day by day, guys. Candle by candle. Thanks, Hondo.
Thank you, Mo. That's going to do it for this morning's episode of Beat the Bell. Thank you, everybody, for joining us. Hope that you had an awesome week. Had a lot of fun doing the show. We'll be trading live all day, every day in the Kane Capital Discord. You can go to kane-capital.com. We have a 7-day free trial happening right now, so you can test out the Discord if you're interested. Other than that, good luck trading, everybody. It is OPEX Friday. Be careful. And we'll see you back here on Wednesday morning. Market is closed Monday. Have a great long weekend, everybody.